Good morning. My name is Scott Redler, the Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. Big part of what Scott and I focus on is identifying key days to confirm what trend we're in. And Scott, clearly November 16th was one of those days where we've seen that significant upside momentum. I think a lot of it is very headline driven, but I also think it's technical as well.
Yes, each step of the way, the market's held where it had to. And, you know, we talked about getting out of the way, taking risk off. You saw in early October, things break down, and that key day back then was that when we broke below 1440 on the S&P. That was a time to take some risk off. So then, you know, 6-7% later on November 16th, you had that outside day. That was a day to switch gears, measure the move, and since then we've had a nice rally to the upside so far going into year end.
So what are you telling your traders to look at in terms of going into trade today? And then we only have, actually this is the last full week of trading, so what are we looking at going into the end of the year?
Well, if the world doesn't end on Friday with the Mayan calendar, you know, there are some things to look at. And if you look at the chart here, you'll see that we've had a pretty extensive move. This was at, key level to get out of the way. Here was your prior uptrend from June 4th. This was your 1440. If you got out of the way, you saved yourself 6-7%. Then here's your reversal. From there, we've had a series of higher lows. Here's a higher low, higher low, higher low. Then finally, earlier in the week, we broke above this mini downtrend. So yesterday we did have a down day. I don't think it's that big of a deal. I would think that if we're going to have any kind of momentum into the end of the year, I would say we hold above, just say 1428. I'd like to maybe even see us hold a little bit higher. But so if we hold these levels, every time we've had a mini pullback, it's been met with buying. I do think that we're going to head higher. I just don't think we're going to have enough juice to take out the 1474 high before year end, but big deal. I think that happens pretty soon into the first quarter of 2013.
Moving along to the sector spotlight, another thing that Scott and I focus on is trying to get ahead of the trends. So let's move beyond the fiscal cliff and take a look at some themes that we think are going to be really key for 2013. Let's kick it off with emerging markets. I think a big part of the fundamental shift has been from U.S. exposure into areas such as China, Latin America, particularly Brazil, because of the raw material exposure. And if we take a look at the ETF, EEM, where we're not involved in one particular name, we can manage our risk a little bit better that way. We'll see from a fundamental perspective and also on the charts, this is lining up really nice.
Yeah, if you look at a lot of different time frames on the EM, they're all lining up depending on what you trade. So if you look first at the daily chart of this, the EM ETF, it just had a really nice move above this recent downtrend. So, short term, if you wanted to get involved, the price was about 42. Sometimes you might see a retest of that, but you might not. So at this particular point, it's in motion. But from a macro point of view, you go to the monthly chart and you look at where this is at right now for positioning for next year. It's just starting to get above this inside wedge. So with that being said, you have a high, lower high getting in motion. I do think that short-term, objective-wise, you could probably get up to about 47. And if the world markets really want to rally, and we're in for this super cycle that guys like Billy O'Neill talk about and some others, or William, I'm sorry, you could see this take out 50 and even test the highs here. So I think equities are far from dead.
Oh, I agree 100%. And I think another key theme for 2013 is going to be CapEx spend. Sectors that have that significant exposure to it are the industrials and mega cap tech. At the end of the day, you have to upgrade equipment. You have to upgrade your technology. And I think we're really going to see some significant momentum there. The XLI, they have names in it like GE, Honeywell, M. I don't think I'd want to get in one name specifically because you do have a little bit of that headline risk and we still have to get through the fiscal cliff. But if you want that overall exposure to CapEx, ETFs such as the XLI, XLK for tech, even the Qs, if you will.
Yeah, and if you look at the XLI, you'll see that it's in motion already. It's something that I don't really focus on, but if you look at it, it looks pretty healthy. And as a trader, you have to start focusing on other things that are working, and this group looks poised for next year, for all those fundamental reasons. And technically, you go to the chart, look at this level it just broke above. This was a pretty significant downtrend. It broke above it, way back when, okay? So at this point, it hasn't even come back to retest it. You go to your monthly chart of this ETF, so to speak, and you will see this, just like the EM, is actually showing relative strength considering how high it is to the historic highs from 2007. So overall, technically, everyone says they hate the market, but here you go. Here's your outside day back in 2009. Higher low, higher low, higher low, above all the key moving averages, starting to break a mini downtrend here. To me, I think that this is going to be a very interesting group, and I think you should have a bullish stance on it coming in 2013 as well.
I think another big theme that we're going to look at is M&A and some LBO activity, because we had such a significant money raise in 2008, 2009, that 5-year lockup is going to start to come off. You also have so much cash on the sidelines.
Look at NYX today.
Exactly, right. And just, you can only pay so many dividends, you can only buy back so much stock. It's not creating any value, but when you see areas such as mega cap tech, where they're going to put some money to work, growing in areas such as services and analytics, and even one of my favorite names, Mosaic, that Cargill lockup comes off in May. Look at what that's done. We've been talking about this name all year and expecting the momentum to come in December.
Okay, well, there's a lot to like, and just to do a quick little chart of the Qs, because you talk about, as far as mega cap tech. Short term, I've been talking about this little inverted head and shoulders pattern. Here's your left shoulder, here's your head, here's your right shoulder. That was that outside day on November 16th. Just broke above it. I don't like the fact that, it didn't get any follow through, but I still think it's okay at this particular point. Maybe you get a retest of the moving averages coming in around 65.80. But overall, this pattern from 62 to 66 measures a move from, 66 back to the highs here of about 70. So there'll be a lot of stocks within this group making some nice moves that will be trading from an active position, and then maybe even from a swing position, more in the ETFs.
We're going to go to a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches and take a look at some individual names and sectors that we think are going to have some nice momentum for 2013. We're going to kick it off with the online brokers. Scott and I started talking about this on November 19th, right before the Thanksgiving holiday. This isn't a victory lap, but we're going to show how fundamentals and price action confirms some of our theses. We're going to kick it off with Ameritrade. I love this name. Out of its peer group, E-Trade, Schwab, Ameritrade, fundamentally it looks the best on every single metric, and I also think what we're going to see with the whole group is average daily volume stats are going to go up in 2013 because the retail investor pulled away from the market a bit in 2012. So they have the most cash on the sidelines in terms of asset balances. Daily trading volume is going to come back up, and if we ever get back to an interest rate environment that makes sense, the balance sheet's going to get some support.
Right, and you have music to my ears. More volume, retail investors, it's great for the overall business of the stock market. And unfortunately, what brings retail investors back is higher prices. They don't like to buy in the hole. They don't like to embrace volatility. We're actually trying to teach them how to do that. But overall, if we do get a continued move in the market, you're going to see them come back, and then that will be very good for these online brokerage firms. And I remember on that day, I wasn't even really looking at it. And you're like, I like Ameritrade. And I was like, okay, let's look at the chart because I do a lot of work with Schwab. So anyway, so you look at both of them and look at the move. We'll go to AMTD first, and you'll see here, boom. I think it was right around here when you mentioned, I'm like, okay, a little move off the lows, nice little bull flag type pattern. You had a wide range bar to the upside. Then you had another little downtrend, held higher, and now continued. That's a nice percentage gain. You go to, a longer term look at it, and look where it is. It's really nowhere. So, next level here for Ameritrade comes in around $18. I think that shouldn't be too much of a problem, and then we'll see if we can go higher. For Schwab, which is someone that I speak for, all the time, or a few different times, here you go. This was the same type of pattern. This was that downtrend, and look what Schwab did from 13 to right back to that resistance. So this had a really nice move also, and then you have another big resistance here. So all in all, you don't have to be in a mall, pick one or two, but overall, if the trend is for higher volume, maybe interest rates, backing the balance sheet, I think that these are two names that investors can go with.
And one thing I love with the charts is we saw how they started talking about average daily volume going up, and every time price action confirms our thesis, you can't ask for a better setup than that.
And then you go with it.
Exactly. Moving along to our next theme, we're going to take a look at some of the auto names, not Ford or GM, but a name like AutoNation, and I think there could be a momentum play here short term, and I also like it long term for 2013. Car dealers have their best days the last 10 days of the year, and that's what we're going into. We're also seeing sales numbers just improve in the U.S. and China in particular, which that market is relatively untapped compared to ours. So I think you're going to see names like this that are not just paying back through dividends, they're also growing via acquisition. AutoNation's just made 10 acquisitions in Texas alone, so could be an interesting trend here.
Yeah, and this one's corrected a lot. This one was a runner. Everyone didn't understand it. Shorts were getting, squeezed. And if you're not in it, which I'm not in it, you have a lower level area and you have a thesis like the last 10 days of potential upside sales. You look at the chart here, you know what? You do have some points of interest. This is when this uptrend or this high level trend broke. Here was another area when it really shouldn't have broke below, and it broke below that. So if you've been out of the way, very good. So at this point, this is not your problem. It could be something good for you because you have a lower level base. You take a closer look here, you'll see, so against 38, that's your support. If it starts getting above this, 40-ish area, I think you see a quick move to almost 42 before you get some, real resistance. And then from there, you could remeasure it. But overall, at least you have points of reference here. The pattern's somewhat tight. I think your buy areas when it gets over 40 and closes over 40. But, it still technically has some work to do.
Moving along to our last theme in the trenches, we're going to look at the payment processors. Now, we talk about MasterCard and Visa a lot in 2012 because these were one of those names where 52-week highs beget 52-week highs. And again, going into the Thanksgiving holiday, we're like, okay, well, we're going to have our last 6 weeks of the year. Payment processors typically do very well. It's a good seasonal trade. And look at what these stocks have done.
Yeah, MA and Visa have been leaders for years now.
Right.
Every time the financials came in, they came in less, and then they wound up making new highs first. So investors in MasterCard and Visa, you know what, you're probably very happy. No bear market there, but it goes to say for a lot of stocks. But anyway, you look at MasterCard and Visa, you always want to see if something changes in the next year, if leadership changes. So at this point, it's intact. You look at the chart, you will see that, as long as a trend like this continues, like an uptrend, which we've seen time and time again in these, you stay with it. It's been following the 8 and 21 day for the majority of this year. So as long as it stays above it, just stay with it. Stay with the trade. I don't like to chase price, but maybe it pulls into 480, 481, maybe it doesn't. But overall, MasterCard and Visa, have been trending to the upside for a long time now. You go to the monthly chart and you'll see, unbelievable situation since the IPO. That's why you always want to focus on, new companies that are innovative, that go public, because within the first, 2008, 4 years of an IPO life, you could find yourself some really big winners, and Visa and MasterCard have been both of those.
Moving along to quick hits for quick cash, we're going to kick it off with Apple. And what I find interesting here is traders have made their careers in 2011, 2012 trading this name, but we're seeing a significant shift in composure. Apple tended to lead the market. Now we're seeing the market outperform, even though Apple isn't. And I think that's a really key dynamic that we have to look at, particularly going into 2013, where we see new leaders emerge and what's really going to lead the market forward. Are we going to go back into more traditional themes like industrials, mega cap tech, and so forth, and not be so reliant on Apple's action?
Yes, and I'm one of those guys that are going to have to switch some gears because I do try and trade Apple. I almost trade it every day, and only when, usually when there's a setup. And I'd rather be long it than short it. But at least, if it's not a long, you can get out of the way. And recently, Apple has definitely tarnished the psyche or broken the halo. We've been quoted in articles of that. Ever since the high here of 700, if you look at the chart, this was that head and shoulders top. This was that left shoulder, the head, the right shoulder. This is when it broke below the 21-day moving average, when I got stopped out of a nice trade that we tried to trail the entire way up. And then it's been methodically to the downside, just giving you no real reason to own it except for a trade. Here is your first little reversal. Reversal went back up to retest the moving average and failed, came down real quick. And now here's where it is. It's only right here. I caught a nice little trade at 505. Stayed with it, got out of it yesterday. I have a little left. So for me, this is it. Okay, if Apple breaks 520 and a quarter, I'm done with this. This was just a small bounce. If it could hold 520, 524 and break this little micro downtrend and start getting above, just say 535, perhaps it could get another move back to these moving averages where there's resistance, because the real elephant in the room in this stock is the weekly moving average, the weekly chart. Okay, the weekly chart, a lot of guys are saying you have a really big head and shoulders pattern where here's the left shoulder, here's your big head, here's your right shoulder. And I know we held the neckline the first time, right here, but chances are if we get to that 505, 500 again and it doesn't get out of this area, next time it's not going to hold so well, and you could see a move down to the 471 area and maybe even down to this 440 area, which is the last time it broke out. So at this particular point, I'm taking it day by day.
Right.
You know, a lot of my community missed the entire down move, which is good. You know, they didn't make as much money shorting it like some other desks, but whatever.
Right. Well, the whole thing is with Apple, it's almost like if you talk about Apple or politics, you have to expect that you're going to get beat up, right? So, I mean, I remember that I was on TV and they were asking me, Jill, Apple or Google? And, you know, my thesis was I want to be in Google. Apple concerns me with margin compression, market share loss, and the fact they're very product dependent, which is why I like a name like a Google that has multiple verticals. You have the product, you have the services, you have the online, you have the search.
Right.
Price action, again, confirms our thesis.
Yeah, and you know, a lot of people trying to talk to me about what I'm thinking for 2013, because 2012, my high beta play of the year was Google,
Right.
and it was 747 to 8.25. That was the target, and it went to, I think, 770. So, you know, it's how you traded within those targets is how you profit from it. But overall, Google lately has acted better for a lot of the fundamental reasons you said, which was a lot of the reasons why I liked it going into 2012. So if you look at the chart, you know, it definitely got damaged on that report. You know, intraday, surprised a lot of people, engulfed this entire range. You know, the high here for Google was 774, right in the target area. It started like at 600 earlier in the year. Recently, you know, as a trade, once it got above this 675, that's when we started to look at it again as it started to repair. You had a quick move to 705, held 680, and now it's holding better. It's actually negated a lot of this damage right here. You know, it took back over half of it. So at this point, I'd say the longer it stays above 708, 710, the more it can go towards the highs. But I think one of the problems here on these high beta names is just the price. And I know that, you know, if you split a stock 8 for 1, you know, it's still the same valuation, so to speak. But, you know, a lot of psychology comes into play with these stocks because, you know, $700 or so dollar stock, individual investors just can't buy. Even some hedge funds right now are having problems. So you split a stock like that, you get some retail interest, you get some comfort back. I still think you got to split Apple. You know, before I said like 2 weeks ago, I'm like, split Apple before the street splits it for you. I think it would make it much better because then people don't realize if it's a 12 PE, a 13 PE, a 9 PE, you know, it's just not like Google right now is like a blimp. You know, it's $700 stock. Even if fundamentally it keeps having good quarters and the PE goes down, people aren't going to realize it because it's such an expensive stock.
Of course, yeah, it was very capital intensive, just like you said. Moving along to another high beta name, we're going to take a look at Amazon and talk about shift to composure. I remember in December last year, going into the print, we were like short this thing. We had concerns about Kindle and some margin, even though their margin's way lower than Apple. Just look at the way it shifted.
Well, it's also look at the price.
Right.
So some of it I think is psychological,
Agreed.
and some of it is capital intensive. And right now Amazon's only $250. It's not as, you know, capital intensive, and there's a lot more shorts trapped in there because of their business model that people don't understand. I don't have that much success trading Amazon, but as of right now, it is one of the best acting high beta names. You look at the chart here, the chart confirms it. This was that descending channel to the downside where it reversed on November 16th. It was actually above the 200-day, not like an Apple. And look how it beelined right back to those old highs. You know, early this week we talked about a price point to buy. That was right here, right around this 255 after a nice consolidation. What happened? It hit the old highs, little resistance. So I would say at this point, you know, let it go sideways, but then at some point it could get above this 264. You go to your monthly chart and it shows, yeah, you can be a stock picker. Look at this. Amazon, you know, back from even all the way back here, you know, it's near historic highs. That is unbelievable. People say you can't be a stock picker, equities are dead. Not Amazon investors. If you were an Amazon investor, you did pretty damn good. And if you keep doing your homework and you keep trying to educate yourself, you'll be able to find stocks, you know, whether they're new issues from the past 3 to 5 years or whether, you know, they're innovative new companies that just started to do better. They're always out there. You just, you know, no one just throws them in your boat. You got to learn how to fish for them.
Well, now let's shift gears and take a look at one of the online travel names, Priceline, because when we did our show going into the Thanksgiving weekend, we were looking at travel names, brick and mortar, like your Marriott's and so forth, versus your online travel. Priceline and Expedia were clearly outperforming, but again, we're seeing a little bit of composure shift in Priceline.
Yeah, Priceline, I just think, for me also, it's just people have a hard time grasping that business model, and it's a very expensive stock, price-wise, capital intensive. So I feel like there's like a whole new different set of parameters you have to think about when you're trading these things about how capital intensive it is because everyone's trading options instead. But anyway, you go to the chart of Priceline, and Priceline, you know, this is when we were talking about it and it had a really nice move. You know, you had a nice move, broke out. Here's a small red dog reversal, small little outside day to give you some clues that maybe you have some weakness setting in, and that's what wound up happening. Went lower, you reversed here, you had a big gap down. I think at this point, Priceline's in a void where Expedia, on the other hand, you know, is just trending higher. You know, it's, you know, it has a lot of shorts trapped. It's a $60 stock or so. You know, holding this gap was good. It's right near old highs. It's above all the moving averages. In my opinion, this one is in the cards to make, new highs very soon compared to some of the other ones showing a little less, relative weakness, so to speak.
And let's wrap it up with First Solar. This has also been a great trading vehicle. Whether you're long or short, we had a broker take up its target yesterday. There's also some chatter surrounding the name after it pulled out of a conference.
Yeah. There's always chatter around this name for some reason.
I mean, this is why you have Costco-sized Tums on your desk.
Well, these stocks that have fallen from graces, that are all heavily shorted, at these lower levels are good trading vehicles because when there's a power behind the punch because of the shorts. And last time we talked about it, FSLR was right here. Look at this nice price pattern. You had, a wedge type pattern. You had a series of highs that gave you resistance and a point of reference to trade against, broke above that 25, and ever since then, it's been methodically stair-stepping higher. Here was a nice bull flag above that breakout, giving you another powerful area, and here you are again. Another bull flag started to go a little bit yesterday. Everyone always needs to attribute it to something, so that's when people start chattering. But if you look at the weekly chart of where it is, this is where it came from. So it's really, still, all the way down in this area with heavily shorted. It could do what it wants to do. I think the next time you see real resistance will be into this area. So I'm not involved with this one. Sperling likes to trade it. It's one of his positions. And at this particular point, broke above the tight pattern. You're seeing some continuation. I think the path of least resistance is probably 40, 42.
Well, you just reminded me of something that could be interesting today. We have Ackman speaking. So Herbalife's going to be all over the map. And then you might see some interesting trading action. And again, we're coming into options expiration on Friday. You're going to see some volume naturally come back into the market and, of course, some volatility.
Yes.
So there's going to be some, I think it might be, volume's going to thin out, but there might be some fun opportunities in there.
There's always opportunities. And same way, I hate to say timing, for the last few months we've been all over the banks.
Right.
Bank of America, Goldman, JP Morgan, and it's been an unbelievable sector. And then all of a sudden, 2 days ago, as I get in toppy, that's when the big analysts come out and say they love the banks. And then we get a pullback. Yes, I'm not going to name names.
Thanks for calling the bottom and calling out the top, making our job easier.
But but at this point, I also think the banks for 2013 are going to be the place to be as well. But we just had a nice move. You just had Bank of America go from 980 to 1140. Goldman went from 120 to 129. You could probably look at all the stocks and see the same thing. I think those need to digest, and then you could reposition for a nice move in 2013 in the banks as well. All
right. Speaking of 2013, from Scott, myself, the T3, and the Street teams have a very happy holiday. We're looking forward to coming back as a team in 2013.